Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 4:54 a.m. Central Time, and I'm recording this in preparation for the market day of December the 22nd, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive into the morning report. And at the time of this cut, we were just a little bit weak, but nothing of any significance. We're down 3 points in the S&P futures, or about 0.15%. Russell futures are down about 1/3%. Nasdaq futures were down about 1/4%, and Dow futures were down about 0.16%. Crude oil up about 0.6%. Euro is essentially scratch. Bonds were up just about 0.16%, and gold was down about 1/4%. In overseas action, China at the time of this cut was up about 1/4%. Hong Kong just about the same. Japan down just marginally, about 0.16. Germany, though, probably the biggest mover in the overnight action thus far, was down nearly 1%. United Kingdom essentially scratch. In terms of macroeconomic reports for today in the United States, we have existing home sales and final GDP. Those will be the two big numbers that'll be coming out today. Tomorrow, much more crowded report. You'll have in the U.S. core durable goods and its related reports, personal spending, new home sales, University of Michigan consumer sentiment, and inflation expectations. You'll also have the crude oil inventory. So kind of keep that in mind. Thursday, of course, there'll be a half day of trading, and then Friday the markets will be closed. In terms of current volatility conditions, you have short-term VIX down below an 18 now to 17.55. Skews also dropped to almost more normal levels at a 125. IV percentiles 27 for the S&P, 23 for the Russell, 24 for the Nasdaq, and 32 for the Dow. So all very, very low. We did have volatility continuing in price action yesterday, and then we had standard deviation moves put in on 3 of the 4 indices. So if you look at this, with the Russell, for example, what is that? 6 of the last 7 trading sessions have had at least a 1 standard deviation move. In the S&P, you have, out of those same trading sessions, you have 5 of the 7 trading sessions at least a standard deviation move, and 3 of those, quite remarkably, were 2 standard deviation moves. So quite a bit of price volatility in the current market. When you look at this, though, we really haven't done very much in those 7 trading sessions. If we were to look at this 1, 2, 3, 4, 5, 6, 7. So the close 7 days ago was right here. The close yesterday was right here. So we've gone in those 7 trading sessions from close to close from we'll call it 2012 to 2021. So we're actually up during that period by about 9 points on the SPX, and yet we've had all this action just to kind of end up back in the same general area that we were to begin with. Now, if I had drawn from here to here, obviously we get a different answer. But just kind of looking at those 7 trading sessions where we've had all these standard deviation moves, and where have we gone from close to close, we really haven't achieved anything. And indeed, that is kind of the signal right now, is that we are just in transition, and until we break out of this pattern either to the top side or the bottom side and get the time frames lined up, we really don't have much guidance as to which direction this is going to go. It's just middle of the range chop. And you see, we're even in the middle of the cloud, which is the very definition of neutral trading, choppy trading. And if you try to make much more of this, you're really going to have a difficult time. Notice how deep the cloud is. So while we are sideways, we are also exhibiting quite a bit of movement, and that's why you get this as well. And then of course you got the twist here, which would seem to say that we're going to go down, but we're also, still at this point support has been holding. Now, if this area right here breaks, which is now at the bottom of the cloud, then this gets much, much more ominous. And you see there's not an awful lot below here. This is that area we talked about where it ran up through so fast. Well, it could run back down through that same area, down to the 1870s area in very, very quick order. In terms of, let's take a look at the Nasdaq. Really the same kind of choppy mess. Dow's been relatively weaker. We broke below that, but then recovered a little bit yesterday, but nothing terribly exciting. And then the Russell, which has also been quite weak in the intermediate term, but again, consolidating. And the question is it going to break down and continue with what might be seen as more of this short-term kind of pattern? Current volatility, it's come down quite a bit in the last couple days, and so far today is basically a doji. Nothing really of note there. The only really thing to pull out of this is that volatility, much like the market, is kind of chopping in a sideways pattern, though it is somewhat elevated. We don't like to see VIX futures up over 18 if we think that we are in a healthy bull market, and it's just another sign we're not in a healthy bull market. And let's look at bonds so far. Bonds also in an intermediate term seemingly moving up, which would seem to say that the market and equity should be moving down. And you see it's sitting right here at the top of the cloud in this case, and the expectation would be that this would continue to the upside. So probably not good for equities if that were to happen, though sometimes the correlations don't follow through. In terms of our regular daily report, we're still phase 2 trend reversal. The expectation is that we have most recently found support and moved up, though that has been called into question with the uptrend under pressure that was issued after only 2 days. So again, just more evidence of just really choppy conditions. A lot of these indicators are kind of conflicted and going back and forth with frequent signals, and that's the trait of these kinds of markets. Accumulation distribution, very poor. D minus, Nasdaq a D, GMI index of 1 out of 6 with a sell signal. That author retains his position in 100% cash. Decision point scoreboards still continue the same as recent days. Very poor indicators on the short term, better looking indicators in intermediate, but poor indicators on the long term. Very poor stack there. Again, more signs of chop. Intermediate term market posture bullish with a flat sentiment line, and this sentiment line has been flat for a number of days now, so that is also a sign of some weakness for the bulls. Position sizing opinions, fairly conservative, 50% on both systems. Intermediate term market posture is mixed. The S&P is bullish and has been bullish for a couple days now, but relatively low readings and pretty suspect. Dow's outright bearish. Nasdaq's also bullish, as is the Russell. So 3 of the 4 indices are in a bullish posture, but these have not been holding. They're pretty much flat lines, and they're wrapping around each other, and things are flip-flopping back and forth with these standard deviation moves we've had going both directions in recent days. Hedge warning status, as you might expect, still elevated. Level 2, which is yellow light, be very defensive in these kinds of conditions. Equity risk short term is a 5. Stocks intermediate term is also a 5. In terms of the specific warnings that are built into the system, you can see some of them actually came off yesterday. These first 2 came off. They're back to a normal status. Where we do have warnings still is the VIX futures up over 18. Skew is actually up over 125. And then the intermarket risk aversion indicators, all 5 are still flagging as risk off. This one actually should be in red. The 1 month on New York Stock Exchange, new highs, new lows, 458 new lows yesterday. So that remains in a poor condition. Fear and greed index at a 33, not good. In terms of special opinions, we're still outside the acceptable window to initiate new positions and option income strategies for novice traders. More aggressive traders may find that this elevated premium is acceptable and even desirable, though you have to be accustomed to being able to make those adjustments, have the capital available for those adjustments, as you may very well have increased delta and vega moves in the current conditions. Cover call strategies and put selling also not acceptable conditions for the initiation of new positions by novice traders. Aggressive traders, be defensive, very defensive perhaps, given the current conditions. Remember, this is hedge risk level 2, so if you choose to initiate a new bullish position, you may need to be quite defensive in the way you construct that, and there's a number of suggestions here. In terms, forgot to put the tables in here for the sector market posture. So we'll just skip that for today. That should be enough for today, and should continue to see very, very quiet trading for the most part. That's what you expect in this week, especially as we head into the Christmas holiday itself. That being said, obviously we had standard deviation moves put in yesterday, though much of it was set up with the overnight, and most of the action during the day was actually fading that big overnight move. So bottom line is that you'll have the expectation of quiet markets, though we'll have to wait and see what the markets actually present us with. And always check that momentum and that energy level before initiating any kind of intraday trades when you're in a holiday week, to make sure that you have enough energy to get to your targets. Usually these days are very choppy with poor follow-through on signals. In terms of special opportunities, I'll flip through these. You can always pause and hit your and go to the hyperlinks and so forth. As always, if you find what we're doing here is helpful to your trading, and we notice every single day we get new subscribers to the YouTube channel, and we greatly appreciate that. This is free. We enjoy doing this, but we also admittedly would like to see acknowledgement that what we're doing is productive and helpful, and that we should continue to spend the time that we are doing this. So that can be done by liking us on YouTube, subscribing to our YouTube channel, retweeting us to your Twitter followers and your StockTwit followers. All those kinds of actions give us that virtual pat on the back to encourage us to continue to provide this content for you each market morning. Disclaimers as always, hit the pause button if you need more time to review the disclaimers, and of course notice the link here at the bottom which will take you to the full disclosures. And that should be good enough for today. We'll look forward to seeing you back here tomorrow morning before the market open with the Falcon Global market preview. Good trading.